Welcome back to Alpha Recap. Brittany here. Today, we're breaking down a wild post-close session full of microcap fireworks and some churning among the megacap names. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. It was definitely an eventful close. Markets closed with a clear split between a few massive microcap moves and some rotation in headline tech names.
Okay, walk us through the biggest headlines. What really moved the tape?
So, what really stands out here is that a handful of microcaps ripped for outsized percentage gains on extraordinary volume, while other small names cratered hard. For example, one microcap jumped about 140% to roughly 73 cents on about 750 million shares. Another climbed about 255% to about $18 after it had already surged more than 130% in after-hours trading. And a third one shot up about 194% to about $6.62 on roughly 36 million shares.
Wow, those are huge moves. I mean, when you step back and look at this, that kind of volume on small names is not normal, right?
Right, yeah, absolutely. Two mechanics were operating. Broad, high-volume microcap rallies that looked like coordinated, or at least broad, speculative flows, and then a separate set of ultra-thin tickers where tiny orders produced massive percentage moves. That second category is more about depth, not necessarily broad interest.
Can you unpack that a little? Coordinated flows versus thin liquidity squeezes? What's the difference in plain English?
Sure. Coordinated or broad speculative flows mean lots of participants are piling into names. You see very large share prints across many accounts, wider option activity, heavier trade counts. In thin liquidity squeezes, you might see just a handful of trades, but because the order book was shallow, the price jumps a lot. One is a crowd pushing together. The other is a few orders pushing against an empty market.
And what does that do to people holding those stocks at the end of the day?
It can create dramatic mark-to-market swings. Portfolios saw position weights change suddenly. Analysts noted option premiums widened and bid-ask spreads blew out on many names. That raises execution risk if someone tried to sell into that liquidity late in the day. You might not get the price you saw on the tape.
Big move.
Not what anyone expected.
Yeah, that tracks. Now, the article mentioned sharp sell-offs too. Tell me about those declines.
Several small names plunged hard. We saw one down about 72% on roughly 19 million shares. Another down about 56% on about 52 million shares. And a few in the 30 to 40% down range on double-digit millions of shares. There was even a print that closed at 0 for one symbol, which is almost always an anomaly that needs verification with brokers and exchanges.
Hold on. Closed at 0? That's alarming.
Exactly. Those 0 prints can be a reporting error, a late correction, or an exchange-level adjustment. They can mess with account statements and margin calculations, so compliance and risk teams were flagging those prints immediately. Trade verification and any subsequent exchange notices will be important to watch.
So how do risk teams respond to a day like this?
They tightened liquidity tiers, rechecked margin assumptions, and flagged positions that moved dramatically overnight. Analysts also recommended watching for follow-on filings and corporate releases. Those are the things that will tell you if a move has a fundamental underpinning or it's purely speculative. Yeah, that tracks.
Switching gears. Mega cap context. How did the big names behave?
Futures flashed a rebound into weekly highs, and analysts highlighted AI-linked names like Tesla and ASML as potential technical buy points. Meanwhile, Nvidia finished the day a bit weak, down about 1.8 to 1.9% on heavy volume, with trade prints showing roughly 201 million and 166 million shares in separate reports. That looked more like short-term digestion than a structural reversal, but the volume confirmed conviction behind sellers.
So was money rotating out of Nvidia into smaller names?
Data suggested a bifurcated market. Megacap AI and semiconductor names were steering headline breadth and technical rotations, while speculative capital chased higher beta in small caps. The modest Nvidia dip likely nudged some traders to seek outsized returns elsewhere. That amplification helped fuel the microcap action.
Okay, let's talk about corporate news. Any sector headlines that mattered?
Yes, Disney previewed its new content from The Mandalorian and Grogu, and the advance tallied about $12 million, the weakest franchise advance we've seen, according to analysts. That raised questions about near-term media revenue pacing. Walmart saw 2 senior departures in Sam's Club and U.S. store operations, which adds incremental execution risk under its current CEO. Both developments were incremental, but they mattered for sentiment in consumer, retail, and media.
Interesting. So not headline shocks, but enough to shift sentiment.
Exactly. Small cracks in execution or weaker content previews can change near-term revenue assumptions and thus tilt analyst models, even if long-term strategy is unchanged.
Got it. How about macro? Anything big?
MarketWatch ran a scenario where a prolonged closure of the Strait of Hormuz could mimic the kind of oil disruption seen in 2008. That's a tail risk. If it played out into late summer, it would raise energy volatility and could quickly reprice companies with heavy oil exposure, like Exxon and Chevron. Traders were noting that as a potential shock to watch over the long weekend.
Quick hits time. Rapid fire. What else stood out?
Nvidia down about 1.8% on heavy volume. A mid-cap surged about 14% to roughly $29.38 on 140 million shares. A couple of other mid and small caps finished up single to double digits, and a handful of microcaps doubled or tripled on heavy prints or in very thin markets. Analysts emphasized that the mix of extreme volume and wafer-thin liquidity made the session look noisy.
Honestly, I was a bit surprised by this one.
Me too.
So, what are the main patterns to take away here?
3 big patterns. 1. Retail and speculative capital remained highly active, pushing heavy volumes across dozens of microcaps. That suggested either coordinated retail flows or algorithmic liquidity chasing momentum. 2. There was a clear divergence between megacap leadership and small-cap volatility. AI names drove headline rotations while money searched for higher beta elsewhere. 3. Liquidity bifurcation. Some big percentage moves came with massive volume, others with virtually no depth, and that signals different market mechanics. Squeeze dynamics in thin names and broad speculative engagement in liquid microcaps.
Short and sweet. What should listeners watch when markets reopen?
Follow these checklists. 1. Look for follow-through volume on the biggest gappers. Sustained heavy volume validates momentum, but fading volume suggests reversals. 2. Verify any anomalous prints or exchange notices. That zero close or any trader corrections will matter to account reporting. 3. Watch Nvidia and AI leadership. Whether Nvidia stabilized or extended its pullback will influence sector flows. 4. Monitor corporate catalysts over the weekend. Updates on box office for Disney and succession news at Walmart could sway sentiment. 5. Keep an eye on geopolitical developments in the Strait of Hormuz and oil price moves. And 6. Watch volatility measures like the VIX and option order flow for signs that risk pricing is shifting between small caps and mega caps.
Great checklist. Any final takeaways for traders and analysts?
Bottom line, Friday's tape was defined by extreme idiosyncratic moves in microcaps, some of which came with record-like volume and others with wafer-thin liquidity. layered over a market that showed mixed signals from megacap AI names. Analysts note that follow-up filings and the next session will be decisive in sorting sustainable momentum from transient spikes. And remember, unusual prints and huge intraday swings raise execution and verification risks.
Quick reminder, this is informational only. Analysts note trends and data, but this is not a recommendation to buy, sell, or hold any security.
Exactly. This is market color and analysis, not personalized investment advice. Always verify filings, quotes, and consult your advisors.
All right, that wraps our recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. Catch you next time.